Good morning, Fractal Effects team. We're still watching the market from the morning session. So before we get started, please make sure you read the disclosure in the footer section of fractaleffects.com. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we have another interesting mix today. Pretty big divergence. So we had a mixed model sell on NAS, and we had a buy model on US 500. We have a clean break to the downside to the MM on US 500 with a 5M fair value gap right there that we're coming back into. But on NAS, we've had a double break to the downside. So remember, when you have divergence like this, where one pair is telling you 100% of a different bias, you want to avoid trading or only use it to take it to the low-hanging fruit, which again today was New York fair value gap right there. So unfortunately, it came back up into here before even tapping us in. This would have been our first 5M fair value gap. Now, I'm not saying that this can't continue to push up, but when you have this kind of divergence where you have a double break to the downside on a sell model and you have a clean MM with a buy model, again, those are two different stories completely. This isn't a slight bit of deviation. This is huge. So I personally like to avoid markets like this, but we're going to walk you through this still, just to show you how we do our analysis. So the only way this thing could push up is this is a daily fair value gap right here in yellow that I marked out. And we could get what's called the 10 o'clock reversal, which we hate trading. You don't want to trade a 10 o'clock reversal. 10 o'clock reversal, at 10 o'clock, the new 4-hour candle prints. And technically, it should be a continuation candle, meaning on the 4-hour higher time frame, we expect the story to be consistent. 6 o'clock should have either swept out liquidity or hit a higher time frame fair value gap, and then 10 o'clock should be a continuation in that direction. What you don't want to see is 6 o'clock sweep, higher time frame liquidity, and then 10 o'clock drop down and hit a fair value gap, only to come back up and take out 6 o'clock's high. So that's what we're trying to avoid, but at the same time, that's the only way US 500 could push up. Because right now we're bouncing off of that 5M fair value gap, we're bouncing off the DSD low, and there's your 10 o'clock opening fair value gap as well. Now that's the fair value gap that's created, again, with the opening of that new 4-hour candle, but on the 1M. So this then becomes our low-hanging fruit when you have that much divergence. When this is telling you, I want to push down, and this is telling you that I want to push up, that's the happy medium right there, the NYC fair value gap. Now we haven't hit the midpoint of it yet, so we could still tap here and pull up into here, but that's not a 1 to 3, right? Then you're just gambling. If you don't have a 1 to 3 risk to reward, and there's not a 70% probability of the market going in the direction you want, then you're gambling. So with this much divergence, even though this thing could just rip right through and head to the top, and so could this could be a 10 o'clock reversal, we don't trade 10 o'clock reversals. And we don't trade when the divergence is this great. This is telling you you cannot buy this market. This is telling you you cannot sell this market. But these two are supposed to be moving in unison. US 500 on the right, NAS on the left. Remember, trading, like when you're trading and you're doing it right, it should look easy. This is not easy, not to mention there's no high impact news drivers today. We do have one tomorrow. So what happens on days where there's no high impact news drivers? The market likes to go back and forth, sweeping out liquidity and stop orders and returning back to fair value. Now, what's fair value? That's true day open right here, which is already marked out for you by the indicator. That's midnight open New York. And the new week opening gap or the new day opening gap. All three of those are up here. But right now, the way it stands, this is not a market I'd be interested in trading. The only way this could push up is if we get a 10 o'clock reversal on NAS. And that's something we don't trade. Now they could pull NAS back up here since we have not tapped. So New York was a breakaway gap. The New York opening gap was a breakaway gap. And then the next fair value gap, I'm just going to zoom in a little bit here. The only other, I should say, fair value gap that's been created on NAS is right under the new week opening gap. We can zoom in here, sorry. Every time we go live, it just certain features on TradingView get a little haywire. But there's your 5-minute fair value gap right in there. So that has not been tapped. That's the only one that's been created. So they could run NAS up into here. At the same time, they could use that opportunity to run US 500 up into the midpoint and into the DSD high if they choose to, or they could just drop both of them from here. But as mentioned before, that was the only happy medium right there. The New York opening gap on US 500 on a day like this when you have this much divergence and it's technically already been tapped. Wow, that was a day. So there's the 5M fair value gap right in there. That was a pretty big delay. Let's hope that doesn't do it again because I did click it twice. So we are getting rejection. One minute, 9 seconds left. This is the last strong hold for a bullish argument for US 500. If it cuts right through this, so this is the first candle to come back into that 5M fair value gap. So if this one closes below it, you can consider that 5M fair value gap violated and the market could push down, give us a double break. So those are the only two narratives right now. Either we get that 10 o'clock reversal, which we don't trade, and same thing here, we get a push up where they'll take this back up into the midpoint, still not a 1 to 3, so there's no point in taking that. And at the same time, they could drive NAS back up into this fair value gap, which is the new week opening gap. So not really good conditions for buying. You only want to buy if you have a bias to go higher into the higher time frames. Like right here, for example, this is a 15-minute fair value gap in Aqua. So if we had a long bias, we'd want to take it all the way into here, but we don't have a long bias. We got a short bias on NAS and a long bias on US 500. So you can't really take it much further than here. Could it go further than here? Of course. But we're telling you what the highest probability is of it doing. Well, there's a huge time lag right now. That's because of the software. 1 second. We might actually have to refresh. The more I click it, the more it's just going to continue to zoom in later. My apologies, just having some technical difficulties here. Might have to cut the feed here and come back. This time delay is going to keep messing it up. My apologies, we'll be back in about 5 minutes. We're just going to have to cut the stream and reactivate it.